Hey guys, so thanks to Ryan here, one of our lifetime members. Thanks to him, we're going to do a little recording for everybody's benefit on how to take your trading to the next level mechanically. And I can tell you guys from my perspective, as my trading career grows and grows, and I go along my journey, as I'm adding more contracts to my risk, as I'm risking more per trade, I need it to be more mechanical for me and my blood pressure. So I know this could be really, really beneficial to you guys. And Ryan's going to kind of help break down what we went over on Friday, a couple days ago, and how he's looking forward to using it this week. So Ryan, if you kind of want to talk to everybody first about, how you're going to make sure that you're looking at context on your chart.
All right, guys, so for context, I am looking at the volatility forecaster. And so what I'm seeing right now is we had a pretty big sell-off late in the New York session. And I know Sydney and Tokyo is getting ready to open here in about a half hour.
Yeah.
So since we are very cheap down here below the purple box, I more than likely will not be looking for any shorts.
There we go.
Since I think we're pretty oversold, and I will be looking for longs.
There we go. So, and we're getting a new forecaster once the market opens, like Ryan said. But it's very, very important that you have something on your chart for context. So, Ryan, as you guys see in the mentorship channel, he draws his levels and he has his game plan. So if you've taken the mentorship like he has, you can use what you've learned from the mentorship for context. If you are not in the mentorship, but you're using the indicators only, that is where the forecaster really comes in, and the forecaster will tell you, are we cheap? Are we expensive? So that is great for context. And then for market conditions is the next thing. There's a lot of ways we can get market conditions, and we can do higher time frame candle coloring with strict candles. We can do two higher time frame candle colorings, right? A 15-minute and a 5-minute. We can do the dashboard. Those things can show us conditions. And then on Ryan's chart, Ryan, if you want to tell me, what are you doing for conditions? How are you going to see the conditions of the market?
So for conditions, I use the mentorship averages, and we have two rules that we follow. Whenever they are in order for a long, I'm looking for long. If they're in order for a short, I'm looking for shorts. And when they are in neither order and they're topping, I look for longs below whenever the averages are out of order, I look for longs below them, or when they're short, whenever they're above them.
Perfect. Yeah, exactly. So really nice and simple, easy. Yeah, that's perfect. So Ryan's got his market context on the chart with the forecaster, along with the levels he'll be drawing. He's got his mentorship average for conditions, and now let's go into the market timing.
Okay, so for the market timing, I am using the algo, the V2 algo, and when I see the evidence line, this red line, turn red, I'm starting to switch my bias from long to short. So for example, up here, I would start to lose interest in a long and look for a short. And then I'm looking for the cloud, which you can see right here. Once it turns red, I have the evidence line and the cloud both showing red. Then I'm starting to look more for a short. And then down here, when the reversal band starts to turn red, now I'm fully committed to a short.
Nice. Yeah, exactly. Really good. So let's go into the V2. And let's, I don't want to mess up your settings, so we'll leave the signals on, but let's go down to the tools, and let's turn off the retracement reversal line tool, and then let's turn off the cloud.
So turn off this and turn off this.
Yeah, we'll hit OK. So just paying attention here to the evidence line, it's pretty clear to see that we should be looking for shorts, right? And if now we turn on the mentorship averages, the mentorship averages are agreeing with us that we're in a possible short on one of the time frames. And now we turn on the forecaster. And the forecaster then shows us how expensive we were. Super, super expensive. Everything's red. The mentorship average line is red. The evidence line never turned green. And down we go. So really, really, when you have those three things on your chart, when you have something that shows condition, we have something that shows context, and we have something that shows timing, it makes the charts much easier and clearer to read. And when the charts are easier and clearer to read, now you can just focus on what really matters, and that's what are your setups for position sizing. So if you guys see that you're looking to take a short and price is in this green super expensive box, that's a pretty high quality setup. Wouldn't you say, Ryan?
I would say so, yes.
Yeah, versus, taking a short down at the bottom gray box, it's not as good of a setup. Right? Because price is cheap in that bottom gray box, but it's still there. It's still a great opportunity, right? But it's not as good as taking it in the green box.
Higher probability up here.
Yeah. So, when you have a nice clean chart and you're not changing the story on your chart, you're keeping the same settings, you're keeping the same indicators, you're trading with the same look on your screen day in and day out, you start to formulate a game plan around position size, which is really what the next step is what is the trade setup that we want when price is in the green box and everything's going to be a short versus a position size for when it's in the cheap box and it's going to be a short, right? I might not be so keen to go heavy in the cheap box. I might be more keen to go heavier in the green box. Does it make sense?
So more contracts up here and less contracts down here?
Yeah, or if we go the opposite route, maybe you're looking at a 20-point trade, 20 or 30 point, maybe 40 point trade from the bottom gray box to the pink, right? But when you're taking a trade from the expensive green box, your mindset could be on a 100-point trade, right? So we have position sizing first, and then we have what is the reward. What is the plan for a reward of this setup? Is the reward usually really good for 20 or 30, 40 points? Is this a more of a higher chance probability of a 100-point trade? Those are the things that we want to think about. And by having the context on our chart, then having the conditions on our chart, followed by the timing, it allows you to think about other things. You're no longer having to think about when do I enter, why am I entering, how am I entering. All those things become second nature to you. And you can focus on what really matters is, hey, this is the setup I've been watching for the past week. I'm going bigger contracts. Or this is the setup I've been watching for the past week. I'm looking for 100 points on this.
Okay, yeah, makes sense.
So now let's go ahead and turn on the retracement and reversal line. There we go, and we'll hit OK on that. So if we can click on the candles. There we go. So to clean up the chart even more, guys, you could actually remove the candles from your chart. And to do so, we're going to hit the gear button on the top right of your TradingView chart. And we're going to click on the coloring. And we're going to change the opacity to 0. So you can see that the coloring was originally gray and it was just changed to 0. And the reason why we're not hitting the check mark and we're not just turning off the body is because that's going to throw off the scale of your chart. Price is not going to be followed as closely. You're not going to get down below where it says last, those price lines last. We want to be able to see those things. So by keeping the body on, by keeping the wick on, even though you don't see the candles are still technically on your chart, so your chart scale would be right and price will be followed correctly. All right, so we'll hit OK. So again, the benefit of this is you can still see the actual price by the horizontal line that's called last price line. So when the market is open, you'll see that. It'll be a little dotted line that's following price nicely. But you won't get scared of any type of big candles going against you or anything like that, because what do we see here is purple means that the bulls are in charge, but the bears are taking over. So we can see that as soon as we have purple retracement, we have red evidence, we have red mentorship, there's nothing to be scared of. And then when the evidence line turns gray, the retracement line turns green. So if you're nervous and you want to get out of the trade, it's very easy to mechanically see, hey, retracement line turned green, evidence line is no longer red. That is my exit. I can always re-enter. And then it turns purple. And then 3 candles later, the line turns red again and you're in the trade. And then there's nothing in here that gets you scared out of the trade. And then when you want to see the actual price, you can just click on the bars above. So we'll click on the bars. And there we go. And now you can see the actual price. So 100% up to you guys. But just, you want to keep your charts clean. That could be an easy way to do so. So the last thing is, let's go ahead and turn on the evidence cloud. So how does the evidence cloud help us here? Well, as we just mentioned, the retracement line turned green and the evidence line turned gray. The cloud stood red the entire time, and we are in the expensive box. So by just keeping up with that cloud, that might tell you, hey, I need that third piece to get out of this trade, right? Or if you're scared and you haven't got in yet, or you're trying to get back in it, hopefully you're looking at that cloud and you'll be able to say to yourself, hey, it never did turn green. Even though the other two, one turned gray and one turned green, the cloud never wavered. It stood red the entire time. So that should help you mentally and emotionally get back into a trade that maybe you just lost, because you got out. So that's a great way to use the cloud. Great way to use the cloud. We're not going to go over the other evidence tools. Everybody's chart is going to be a little bit different. You can see that Ryan, we're keeping, just 3 indicators on his chart right now at the moment. So we're being very, very selective as to, the amount of tools we want to have on the chart and what do we want to look at. So we don't need to go into divider line or trail stop or anything like that. But I thought today's meeting with Ryan would be sufficient as far as showing you guys conditions, context, and timing, because Ryan has a really nice clean setup that I wanted to share with you guys. Now, for the last part of this, let's go back into the V2 and look at the signals. And you don't have to use all the signals. I think is the first thing that everybody has to understand, is that you got to start off with one, which is the prove it signals. Prove it's are the earliest signals possible. And our job will be showing, are the prove it's valid or invalid? And they will be very, very early signals, so you'll be able to do that. The next signals are buy and sells and breakout X's. Those signals have nothing to do with win rate. It has nothing to do with the, are we cheap or are we expensive or anything like that. It is just geared to printing in an area where it thinks 100 points is very, very possible. That's the goal of the buy and sell signals. That's the goal of the breakout X signals, is for them to print at an area where 100 points is very, very possible. All right. So the drawdown on them can be big. If you're looking for a 100-point trade, a 10-point stop might not happen, right? So if you get a buy signal, it doesn't mean you have to jump in right away. For me, if I get a buy signal, I'm fine with 1 micro right away. Why? Because I can risk more than 10-point stop. I can risk more than a 13-point stop with 1 micro. But if I'm playing with higher position sizing, I'm not just going to enter because it says buy. But if I'm entering with 1 micro, yeah, there's a good possibility I'm just going to jump in there. The proved signals are the ones that will help you the most with TP1. The proved signals should win TP1 very quickly, or they should lose very, very quickly. So that's how the proves worked. And then the last one is the heads up signals. If we want to go ahead and go over that, Ryan, if we can go scroll to a spot where we see the firecracker. All right, so there's the firecracker right there. And all you have to do, guys, with the firecracker is just draw a line. If the firecracker is on top of price, then the line goes on top of the candle. And you keep it there. You keep that line on your chart until you get a new firecracker. All right. And the way that works is if the firecracker is going to truly be successful, it's going to be a valid signal. Price is not going back above that line. Price is not going to go back above that firecracker. So what I like to do is draw a line like Ryan just did. And as soon as price goes over it, like we're seeing everything's turning green and price is over it, that's going to be a great trade. And you don't need to look to exit that trade until price goes underneath that level again. And that's how I like to use the firecrackers. Ryan, did you kind of have any key takeaways from our meeting on Friday about these labels that you wanted to talk about?
Everything is pretty clear to me. I feel pretty comfortable with them, to be honest with you.
Okay.
Yeah, I just spent all day going over them. I was going to post the slides here in the chat here shortly.
Nice.
Yeah, I feel pretty comfortable with them.
Good deal. Good deal. So again, this indicator, we're just starting the second week on it, guys. We just released it on Monday last week. It's only a week old. Don't put all the signals on the chart right away. Start with prove-its and work your way up. If I were to select, what signals to work on first, it's going to be the prove-its. Once you feel really, really good with the prove-its, then I'm going to move on to the buy and sells, which don't appeal. They don't appear a lot. They do not appear a lot by design. And then after the buy and sells, I'm going to look at the breakout X's. And then after that, it's going to be a coin flip. Because I'm a trend trader, I'm going to do proved signals. If you're a contrarian trader, you're probably going to do prove it against signals. But when you first start, just don't throw everything on the chart at one time. Make sure that you're following the guide that DC and I worked really, really hard on, where you made sure to set up a chart that's giving you context, that's giving you conditions, and then you're using the V2 for your timing. All right. So once you have that done and your prove it is good, just start adding the signals on slowly, because these signals are not meant to generate the emotion of just getting in. It's meant to tell you the story. That's all it's supposed to do, is meant to tell you a story. So I think the last thing to talk about is what invalidates signals. So we can see that red prove it right there a little bit before 9 a.m. Just because the cloud is green, the evidence line is green, the reversal retracement line is green. Evidence tools do not invalidate the signals. The evidence tools just tell you it's not time to enter. That's all the evidence tools do, is say, hey, Ryan, we got a red prove it, but it's not time to enter. Okay? What invalidates a red signal is a green signal. That's it. What invalidates a green signal is a red signal. That's it. Okay? So if you get a red prove it and you have no other signals that appear after the red prove it, that red prove it is still valid, and it's good to look to take once the evidence tools say it's time to enter. Does that make sense, Ryan?
Yes.
Okay.
So like this breakout would invalidate that prove it.
Exactly. Because we got that green signal after the red prove it, now that red prove it is no longer valid. So I think that's the key to make sure you understand with the signals. The signals are telling you a story. The evidence tools are really the timing of the move. So if you get a red prove it, we're looking for shorts, and the evidence tools need to agree with it. Once there's a green signal after a red signal, you're no longer looking for the red signals to be validated. You're no longer looking to enter them with the evidence lines changing green. So hopefully that helps everybody. Ryan, anything else you think we need to add to this video to help everybody else out for the week?
And then just want to mention that, just say hypothetically this breakout X didn't show up. When the evidence line goes gray and you get the purple reversal line, that also does not invalidate that prove it either, correct?
Yeah, correct. Yeah, nothing. The only thing that invalidates that red signal is a green signal. So you have two options. Either you take the longs because the evidence is telling you to go long, and you keep in the back of your mind that there's a red prove it that has not been invalidated, Or you see the long happening, you see the long playing out, everything is green, and you just don't take it because you have a red signal and you wait for everything to line up for that red signal.
Okay, yep, definitely makes sense.
Good deal. All right. So, Ryan, anything else you think that's good for the recording?
I'm thinking, I can't, I think you covered pretty much everything. I'm trying to think on the top of my head if I have any quick questions, but I can't think of anything, to be honest with you.
Okay. We had a really good meeting on Friday, guys, and I just want to say thank you to Ryan in advance because he has a bunch of screenshots he's going to be posting for everybody to see. That should help you guys as well. Thank you for watching this video. Let me stop the recording. I'll see you guys this week.